Now, what we're using to analyze the data is what a statistical analyst would probably do is put it in a multivariate regression. Use several different factors and see what really drives the price of a stock per se, which is what we're aiming for. And what we want to do is let's just say we're going to use multivariate regression analysis, but I don't think that would be enough as far as finding a predictive value going forward as to, does the litigation outcome really affect the price of the stock? And not only that, does it become an actionable item, because if you don't know the timing of such an event, that would not be as useful. So what we're doing is also using a time series analysis, which combined with the data of this, with the data that we are analyzing, the time series analysis with the multivariate regression should give us not only an idea of the effects going forward, whether the stock should go up or down, not just predicting what direction the stock will go in, but also predicting probably the optimal time or the optimal time range to where we can expect it to move. Because as any investor knows, that essentially every day that a stock doesn't move and yet your money is tied up in it, there's an opportunity cost that comes with it. And so to maximize returns for any investor, we're trying to figure out a way of making sure that our money is always in something that is likely to move and likely move quickly after we make an actionable item. And so sometimes we will predict into the future saying, oh, buy this in 6 months or 8 months, because every litigation aspect has a lag. The company will not exhibit a trend in litigation analysis necessarily within the next day, month, possibly even year. With every company, the larger it is, the lag effect tends to be greater. So a Wells Fargo will probably take, possibly 6 months to a year, possibly longer. Whereas a smaller financial entity that is largely predicated on commercial or household loans would probably exhibit that a lot quicker. And so it's always going to be on a case-by-case basis, and we're going to constantly update that with new data. As Premonition's capabilities become greater and greater, we're going to constantly incorporate the new data. And what will be very useful about that is with every consecutive report that we issue, which our reports will not be issued on a regular basis. We will only do it if we see a difference in trend or we see a significant event within the company where we say, okay, now our outlook for the same company is just not the same. We will then issue a recommendation to, reverse course or just to hold or to buy or to sell, whatever it may be. And so we will constantly update that. And not to mention, we are incorporating a fundamental analysis piece to this. So we also want to make sure that the company is of solid financial health, because no matter all the predictable aspects that we're using through litigation and big data, if the financial health of a company is always a good starting point and a good foundation for what a company should be doing, what a company can be doing in the future. Without the foundation, if we use a big data solution, it will not give the outcomes that we're hoping for. So in all likelihood, what we'll do is we'll find companies, if we're looking at something that we're expecting to grow in the next 6 months, a year, whatever it may be, what will most likely be true is that the company will be in sound fundamental health, meaning operationally and financially. The company has shown that it has good corporate governance and it has a solid balance sheet, solid income statement, and the management has a good firm grasp on the market. And then we'll use the big data solution to add a layer that will help us predict going forward, when and where, what actionable items we can choose. And this can also go in reverse. If we find a company that's in very poor financial health, we can always go in reverse and say, okay, time to short sell it. Because there's, if the litigation if the data tells us that the litigation is actually, the trends are going against the company, well, it should have just the equal predictive power going the other way. And if a company has bad financial health and the data says that it should shrink, or the company should have some hardships going forward, we will update those as well. And so we can essentially, we are totally market neutral. We are not necessarily saying we want companies to go up or down. The thing is, as long as they have actionable items and we see a significant trend and we see significant either strength or weakness in their operational financial health, I think that we're going to have a very great solution here as far as predictability going forward, and also being able to hopefully come up with a smaller range of timing for where we can say, okay, this is going to be profitable for the investor, and within a smaller time range than per se a regular fundamental analyst, where they kind of essentially just give an outlook for the company on one given day, yet they do not necessarily say this should happen within X amount of time, and they don't necessarily give you the exact data, when to buy and when to sell. They just kind of give, essentially a direction. Whereas we want to give a direction, a time, not to mention we're going to use advanced statistical methods to make sure that we have at least a good probability of our hypothesis coming true.